Hi there, and welcome to the Option Pit Trade Idea of the Week. Reminder, none of this should be construed as investment advice. If this is for educational purposes only, consult your financial professional. Options have risk. All right, so I don't know if you guys know this, but if you go to the About Us section on the website, you'll notice one little comment here. Mark has a bachelor's in science from Villanova University. Well, I don't know if you guys know, they just won the national title in awesome fashion. So what we're doing, they won 35 games this year, and so we're going to offer 35% off everything in our product line except Pro through Monday. So and anything that's not one of our ultra specials, we're 35% off. So anything in the store, any of our mentoring services, silver, Option Pit Live, whatever, all 35% off until Monday. You can check it out. We got all sorts of great classes in our catalog of stores, and that is my trade. So now let's talk about my trade idea of the week. There's a lot going on today. We were up pretty strongly on the day. You can see vol's in, not huge, but vol is in and the market's in. We were up a lot more earlier. We were up as much as 18 bucks earlier. We're now we're selling off. And it'll be interesting to kind of see what we do for the rest of the day. Now here's where I'm at. In terms of, I think that we are potentially going to maybe see some softness through the day, but who knows? We could rally. I don't know. I'm not usually a huge buyer on kind of this kind of softness of if we sell off after the European close. That tends to make me a little bearish on the rest of the day. One trade that was kind of interesting that I actually got from Andrew, my number 2, looking for a way to kind of play around, as he called it, Fed shenanigans. I don't know that that is the term I would use, but play around with the fact that a lot of central banks, including the U.S., are messing around with currency and messing around with treasuries, and treasury bonds are moving at just an amazing clip. And so I think one thing that looks kind of interesting to me from a simple trade standpoint is gold. If you really do think the Fed is going to be keeping rates substantially low, look at the movement over the last 20 days, about 20%. The last 10 days, movement's closer to, call it 14. But then if I pull up implied vol, 30-day implied vol is about as low as it's been over the last 3 months. And so if I think gold could make a run at 120, which it might, do I mind buying a call that expires in a couple of days or in a week? And we do have a Fed meeting coming up. Gold could get fun over that period of time. And as you can see, vol is absolutely in since the last time I looked. So what I'm going to look at is these at-the-money calls that expire on April 22nd. I can pay less than 1% of the cost of GLD. Try and pay like $159. And I'm going to kind of see where these things go. I think that if we do, in fact, get a rally as bonds strengthen, it should be an interesting play for gold because it's going to kind of mean that, all right, there you go. I paid $160 for the GLD April 22 18.5 calls. My goal going forward, I want to sell them at somewhere around $2, $2.25, somewhere in that range, hoping to do well. That's kind of my plan. and how I perceive myself going forward. On that note, I hope everybody has a great day. If you've got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01, or you can, email Andrew at optionpit.com. All right, folks, on that note, I hope everybody has a great day, and I will talk to you soon.